What's good? What's good? How y'all doing out there? Thank you for tuning in. It's your boy Jay to the J Jones. Welcome to another edition of the J Experiment. Just wanted to get back. I felt some kind of way, so just wanted to get back at y'all. I felt some kind of way because I had been talking about banking, and I got to thinking. I was like, man, I'm talking about banking. And then I'm trying to just like make it simple. Kind of sound like the old dude, or sound like the dude who, or the person who knows something and then expect that you supposed to just know it. And then you looking at him like, what the hell you talking about? And he looking at you like, oh, just go over there and do such and such, such and such. And you like, you know what I'm saying? That's just weird. To where sometimes, because I even need it. Sometimes I need stuff to be broken down. Like, break it down. Like, you know what I'm saying? And I don't want to be feeling odd or be feeling stupid because I'm sitting there, I have no idea what the fuck you talking about. And you sitting up there telling me something and I'm just like, okay. You know, and everybody don't, you know, you should, the correct thing to do is ask the question, hey, but, you know, that's a whole different ball game because people don't ask questions sometimes just because they just don't want to be, you know, the oddball or feel like an oddball or whatever, for whatever reason. But anyway, what I wanted to do was kind of touch bases on, I went and I was looking at some of the banks in Central Florida. The largest, I just went with the largest. It's like tons of banks. There's a whole bunch of banks. So you can kind of do your own research. But I just kind of went over the largest banks and I just wanted to kind of give you a breakdown of, you know, so you can it'll get your brain to roll into where you'll think, you know, of how to even size a bank up and make decisions on, you know, whatever. But everybody needs to get a savings account, checking account. Everybody needs an account. So I just kind of went over some of the banks, the larger banks that we frequent a lot, just so that people can, you know, I may didn't cover all of them, but I just went with some of the popular ones like Wells Fargo, SunTrust, Fifth Third, Bank of America, Chase, you know, just so that you can be familiar with somewhat of when you walk in the door what you're looking at, or if you look online, because almost all banks nowadays have some kind of way you can bank online and never go into the traditional doors, you know, and whatever. I believe that you should walk in the doors and converse and kick it with people and get to know people and ask questions or whatever. But if you're the type where, you know, you feel like you got to keep it moving and you ain't got time for all that, then online banking might be the solution for you. There's other banks to look at. Like I'm curious about the bank with Killer Mike and the Greenwood, you know, so I'm kind of waiting to see when they open and how that goes, because like I said, I believe in having more than one account. So if I got 2 or 3, 4 accounts, you know, Greenwood definitely probably end up being one of them, because I'm trying to support, you know, anything that's black owned or whatever. I want to support it and see it prosper and bloom. And what harm will it do to spread my money around? Because when you start looking at the different banks and the different stuff, it's not like you really getting a whole bunch. So you just gotta, you know, roll with the best options, but you at least want to have some info on the options to help you make the decision. Like for instance, I was looking at Bank of America. The Bank of America, well, they're actually doing a special right now. They're doing this sign up special. They're giving you $100 to sign up and open up a savings account. It's 3 different savings accounts they do, and they're all based off of how much money you have in the bank. Like if you're 0 to a certain amount, let's say 0 to 1,000, just hypothetical. Let's say 0 to 1,000. They'll have a certain annual percentage yield, and their annual percentage yields start out at 0.1% all the way up to 0.5%. Now 0.01% is the equivalent of 1 penny. 0.05% is the equivalent of 5 pennies. 5 cents on a yearly basis. That's what they're paying you to hold you know, keep your money. And yes, that's crazy. It's like, dang, you know, because what if you doing direct deposit and you putting 4 to 5 grand a month into that bank? You know, on a yearly basis, you're only getting, you know, 3 cents. You know what I'm saying? Like, that annual return is not really nothing to be jumping through no hula hoops about. And that's just a savings account. I personally recommend that people look into money market accounts, because not only do they tend to give you a better APY, annual percentage yield, but they also have other ways that you can use the money to make money. Like, most money market accounts allow you to buy stocks or get into the market. You don't have to get into the market. It's not for the market per se, but it has the options for you to go down that avenue, invest into, you know, other stuff, other vehicles with your money, instead of your money just sitting there. Because if you get 70, 80, 90, $100,000 is just sitting there, you're really not making no money with most of these banks. You're just not. That's just the way it is. But they taking your money and they flipping it, they loaning it out, they doing stuff with it, so they making money, but you not. And that's just the way it is. So that's why once you get to that point in life, you want to take that in consideration and spread your money around and put it somewhere like a money market account, or somewhere where you're getting a higher interest rate on your money. Because see, the thing you got to look at is this: you're going to save the money regardless. It's there. It's not like you're not saving money. So when you get to the point where you're saving the money, if you got 5, 10 grand saved up, put it somewhere where it's making more money, or it's making money for you. If you are not already investing into some other kind of vehicle investment or whatever, you know. But anyway, Bank of America, they're giving you $100 to sign up for their most basic savings account. Now, they're charging $8 a month. They charging $8 a month to have a savings account with them. That's their maintenance fee. But if you maintain a $500 balance, now I think that balance is a daily balance. If you keep at least $500 in your savings, it voids the $8 a month fee. If you don't, they charging you $8. Their checking is, I want to say $12. I think I remember looking at it was like $12 for their checking. And the only way you avoid the checking was you had to have a certain amount of direct deposits in their account, or you had to maintain a daily balance of $1,500. If every day for 30 days your balance need to be at least $1,500. You know, not 600, not 400, not 700, and then 1,500 right before the end of the month. No. Throughout the month, they want you to have at least $1,500 in that account. So that's something to think about. Let's go to Chase. Chase checking accounts, $12, same as Bank of America. It's a $12 fee per month to have a checkings account. That's the most basic, simple account. Or any account. To have a checkings account is $12 a month. To make that obsolete, to get that, to have no fee, you need to have at least a $1,500 balance daily, or you need to have, you know, a certain amount of direct deposits coming in, which at the end of the day is equivalent to, you know, they keep it. They want you to have so much money in the bank, point blank. They want you to manage. That's Bank of America, that's Chase. The Chase savings account is $5 a month or $300 per day balance. Every day you need to have at least $300 in your account, and it avoid the $5. Otherwise, it's a $5 a month balance. They charge you $5, which is not as bad, but you know, whatever. Capital One 360, which was actually it's an online. It's like Greenwood. It's strictly online. You get a debit card, you know, all that good stuff. You have a checking account. You can make all your, most of the time with Capital One, you having everything direct deposit. You having your paycheck, everything straight direct deposit, and you're pretty much functioning and living off of the debit card or the credit card, and you just having your money go straight to them. They don't charge anything for that, which is good. The only bad problem is if you need to go in the bank to do something or whatever, you forced to do everything off the card. You forced, that's just it. Either the debit card or the credit card, you forced. There's no traditional places to go and talk to somebody about a problem. You're going to have to hit them up online or make the phone call and hope that this customer service is on point. Otherwise, ain't nothing you can really do. The only thing I seen that I like about Capital One was the money market account, because based on how much money you have, like let's say you get to the point where you got 8, 9, 10 grand or higher, they give you a 0.29% APY, annual percentage yield. So, that's the best percentage yield of any bank. And that's just through their money market account. So that's something to think about. Wells Fargo. Wells Fargo was similar to Chase and Bank of America. It was a $5 a month savings fee. For having a savings account, it's $5 for the monthly maintenance fee, or have a $300 per day balance. $25 minimum open. Just $25 to open up a savings account. You don't need $100, $200, $300, $400, $500. You just $25 to open up a savings account, and you can start using it, saving or whatever. The checking account is cheaper than Chase and Bank of America and a couple of other banks. Their checking account is only $10 a month. I say only like that's not a lot, but for some it's not, whatever. But you'll be surprised. You'll be surprised where sometimes you look up and you're like, damn, why are you charging me $10? It's just one of them months where certain months you ain't paying attention to it. You just like whatever. Then it'll be them months where things just weird. You're not broke, but seem like you're just spending a lot of money to where you're just paying attention to something, and then you're looking at it and you're like, what the hell y'all charging me $10 for? And you know what I'm saying? So it's like, it can be irritable. It can be a little irritating thing, but it's not nothing big, major, because $10, like you blow $10 just on some bull crap. But sometimes you can look up and you could just be like, what the hell I'm paying $10 for? And it's just, it ain't even the price. It's just, you just like wondering, like, it just feel like you get, like they just running the shoo on you. And you're like, what? Why they charging me $10 for my money? You know what I'm saying? So it's just something to, whatever. The only way you can make the $10 fee go away, you have to have $500 or more direct deposit within each month. Each month you have to have like, so kind of sort of technically, Wells Fargo got it set up to where if you have your checks direct deposit, you kind of waive the fee. Because if you have at least $500 direct deposited per month, they'll waive the fee. Or a $1,500 minimum daily balance, at least $1,500 in the account. Or they have this, at least 10 debit card purchases or Wells Fargo credit card purchases. So you basically, another way you can go without paying the maintenance fee is go out, swipe at least 10 times a month. Now, they don't really get specific about how much, but use your card 10 times a month. They want to see some activity. They want to see money going. Most banks want to see money going in and out. And then that's why I was telling you, like a lot of banks, they appreciate longevity. So if you've been banking with somebody for 10 years, that means a lot to them. Whether you wasn't putting in $2,000 a month or whether you was putting in $100,000 a month, the fact that you stuck with them for 10 years, they really take that into consideration. Like really take that into consideration. That means a lot. And it's the same concept. If you got the bank and you using it constant swiping, whatever, then they like, oh man, this dude, all his money coming to us, and he messed with us. So that opened up doors. I saved these two because, like I said, I didn't, it's a lot of banks. I didn't go into, because we can go into credit unions. Because credit unions, I'm going to give you a quick pro and con of credit unions. Credit unions are great on a local level. Like in the Orlando area, we got Fairwinds, we got McCoy Federal, we got the Navy Federal. You got several different credit unions in the Central Florida area. They great. If you get in with the credit union, that's great. They great. But only bad thing, they great because their interest rates, now no bank, period, credit union or traditional, they're not really paying you nothing to hold your money. So that's why I recommend looking into and investigating about the money market accounts. So you can invest in IRA, CDs, the stock market, ETFs, futures, whatever. The money market account, that's the way to go. You're going to get a higher interest rate when you start playing around in that area. Now I'm not going to go into that because that's a whole different deep ball game, but that's something to think about if you're ready for that. If you're not ready for that, then keep it simple, and that's why I'm going over this, because at least you go in and you open up a savings account and you have an understanding, because a lot of people are just getting into it. A lot of people real ignorant or just don't have the experience dealing with banks. So I think this is very important. There are two banks that when you be hearing the little thing about free checking and free this, and it's only two banks I've seen through my little research that actually you can consider to be free. Like the other banks I mentioned, it could be free if you meet the criteria. If you have this amount of much money in your account every day, we won't charge you nothing. But if for some reason you don't, we're going to tax you. These two banks, SunTrust. Now, real quick, before I go down the rabbit hole, with the credit union, the only bad thing about the credit unions, they tend to be local. So if you need to go out abroad, if you need to travel or go out of state or somewhere, and let's say you have a Fairwinds Credit Union. Fairwinds Credit Union is non-existent in pretty much anywhere other states. You go to Virginia, you go to Tennessee, you go anywhere, you ain't got no Fairwinds Credit Union. Now you still can use your cards at other banks. They'll accept those cards. It'll be a fee with it. And sometimes the different banks will void those fees, or they won't really, penalize you for using your card at the different banks. Sometimes not, because I've been with a credit union and I go to a different bank in a different state because I didn't have no ATMs or no credit union. My credit union not in that state. Then it's been a fee. It's been a $2.50 fee, $3 fee, $2.99, whatever. It's been a fee. I see it on my statement. Like, hey, you use your card in Georgia. We don't have no branches up there, so we taxing you for using it. And but that's the only bad thing about credit unions. They tend to be local. So if you got a credit union, it's cool and you get hell of a benefits dealing with credit unions on a local level. But if you need to leave and go somewhere, it ain't working. Kind of remind me of when Metro first came out. Metro prices was ridiculous. You paying $40 a month for service, this and that, but you couldn't take that Metro phone nowhere. If you went anywhere out your area, you ain't had no service. In your area, you was good. So it's the same thing like Metro. It reminds me of Metro. That's how the credit unions are. The credit union good when you home. When you in your hometown, you good. You ain't nothing. And when it comes time to get loans and stuff like that, them small loans that the big banks usually don't touch, credit unions, they making those loans for you. But that's it. You limit it to the way you can use your credit union cards and all that stuff. But anyway, SunTrust and Fifth Third were the only two banks that really truthfully had something similar to what you would consider free. Like SunTrust, to open up a savings account, no minimum. You know, you can open up with zero, $10. You can go in with $10. Say, hey, I want to open up a savings account. I got $10. As long as you got an ID, as long as you got a social security number, you pretty much can open an account. You know, they're not gonna really be tripping. They're gonna just technically they just want an ID and social security number to tie their account to, because it's your account, and it's pretty much no minimum. There's no monthly fees for their savings. Their most basic savings, no monthly fees. We ain't charge you nothing. Just open up an account, put some money in here. We good. We don't charge you no monthly fees. Also, for their Signature Advantage checking account, no charge. No charge. Now, I didn't really go deep into it to see the minimum, but I'm almost certain that the minimums be like $50, $100. You know, you give them something and open up the checking account, and they open the checking account. And but they don't charge you a monthly fee. No monthly fees, SunTrust. Now, SunTrust is slightly above the credit unions because they tend to have some branches in select states around the country, but not all states. Like, I ain't gonna lie, Wells Fargo, Bank of America, Chase, pretty much everywhere. Like, pretty much everywhere in America, you can find one of those. They everywhere. I want to say Fifth Third is like that. Fifth Third killing the middle ground, because Fifth Third got as many ATMs like every 7-Eleven, all them racetracks, you know, them kangaroos. Fifth Third everywhere. Fifth Third everywhere. Fifth Third has 30,000 plus ATMs around the country. So Fifth Third got a lot of ATMs. They don't have a lot of traditional banks. They don't have a lot of actual brick and mortar banks you can pull into, but they got tons of ATMs. So you can be pretty much anywhere and use your Fifth Third debit card, and you're not going to get penalized, or they're not going to charge a fee for using the Fifth Third card. You way in New York, because you just stick it in there. Now, it'll, you know, I've literally used my card at the dot head little spots, the little corner stores and stuff in the boondocks somewhere or out of state, and they charge you. They'll charge me too. And Fifth Third don't even, they'd be like, oh, whatever. Yeah, we took care of that $250 that they charge you, you know. So Fifth Third is pretty cool. I bank with Fifth Third. Oh, that's one of my banks, and I like them, you know. And I'm not just promoting them or whatever. I'm just telling you the truth. They have no minimum open. You can open it. They don't have a minimum amount that you have to put in to open up a checking account or a savings account. Well, no, I take that back. Their checking account, it is a minimum open. Well, it's not a minimum open. What it is if you don't have money, if you go in there and you don't got number $25, $30, $40, what they're gonna do is open up you an express banking account. And the express banking account is almost like a regular account. The only problem with express banking account is if you try to go and do like a deposit in the ATM, like Fifth Third, you can do a check deposit through the ATM. But with the express banking, you can't deposit checks through the ATM. You have to go in the traditional bank. You have to go through the bank to do it. That's about it. And the express checking account, you can't pay bills online. They don't have that set up with that type of account. Now, they have a traditional regular account that they do, and it's like $11 a month maintenance fee. But that maintenance fee get voided if you use your debit card a lot, or if you have a certain amount. They do have a balance, but they do have a checking account for people. No money down, no minimum. It's an express banking account. It'll get you rolling. Their savings account is straight up just free. Like, you know, you just put your money in, no minimum, no nothing. You put your money in, we ain't gonna trip, whatever. Because, you know, like I said, you know, the reason why a lot of these banks do this is because they make money off you. And that 0.1, that 0.01, 0.02, that's 0.01 is 0.01 of 100. That's 1 cent. That's 1 penny. You know, they're paying you a penny. They're paying you 2, 3 pennies. But then they taking thousands of dollars and they using it to do all kind of stuff to make money. So that's just how banking works. That's how they make their money. You're not really gonna find no banks that just break you off like the stock market, because it's a low risk. Because technically you're not taking a loss. Up to $250,000, I'm almost positive that the FDIC covers that. So if you put $200,000 in the bank and something happened, you're gonna get your money. They're gonna cover all the way up to, I want to say it's $250,000, guaranteed. No ifs, ands, and buts. Ain't nothing to talk about. It's secure. And boy, that's, you know, that's pretty much all banks. There are a few banks that don't have the FDIC backing, but that's really like becoming obsolete. That's not becoming a thing nowadays. Everybody FDIC, everybody, the government backing everything. But anyway, yeah, like, you know, those are just some things to think about and to really check into, and just, you know, go to the bank, look these banks up, and kind of just do your little research, you know, if you're interested in a bank. Right now, I would recommend that people think about the money market accounts, because it's the equivalent of having a savings account with the option to do other stuff with it. So for now, you could just put your money in there. You can just start putting savings in there. But then when you get to where you look up one day and you got 3, 4, 5 grand in there, you can say, well, I want to take $2,000 and start trying to put it somewhere where it can make more interest. And you can do that. But you can't do that with traditional savings and stuff account. You're forced to deal with the bank. Like if I try to do that through Fifth Third with my regular checking account, then I wouldn't have no option but to buy their CDs, their whatever extra investment stuff they selling. I have to buy it. I don't have the option of going elsewhere to buy it. You know, if I get an IRA, it's got to be through their system to where they making their money off of it. But with a money market account, I can have a money market account with this bank, but I can go to Prudential, Charles Schwab, you know, Fidelity, whoever, or I can just go on to E-Trade or Ameritrade and just link my money market account to them and just start buying stocks, buying ETFs, buying whatever straight through my account. It doesn't matter, because we'll just link them up. And you have a joint account, because if you buy, you know, through a financial institution that's dealing with these investment companies, it'll link in to where you kind of technically have 2 accounts going at the same time, in a sense. But, you know, just, you know, read up and check on the different banks, because I didn't talk about regions. It's a lot of different banks, so just check on them. Even your credit unions, you're like, you know, I already kind of gave you the pros and cons of the credit unions, but the credit unions are good. And check on your credit unions, because they even have different fees and different, you know, criteria. So when you're reading on these banks, check on the banks. Read up on them. Find out what they doing for you and they're not doing for you. But the key, at the end of the day, what's important, we need an account. You need an account. That's the foundation that you need to start building wealth, building your riches, building yourself. You got to have an account. That shoebox thing, it ain't working no more. That hide the money under the mattress, it ain't working no more, because that money is not doing you no good. Because at the end of the day, I know we value it, especially coming from the streets. You know, you got brothers out there that start hustling and doing all kind of stuff, and they treat that money like it's just, you know, it need to be protected. It's money. Use it as a tool. Learn how to use the money as a tool to better yourself. Like, you have no business cachet hoarding up money. Ain't no business with $100 and something thousand stashed somewhere. That's stupid. Like, put your money to work. That's where we got to go. You know, back in the days we would do that because we ain't know no better. But we know better, so we're going to do better. Educate, then you elevate. We're going to educate, we're going to learn, and then we're going to elevate, take it to the next level. That's how we're going to do it. But we got to understand the basics. So for now, read up on your banks. Check out Greenwood. Soon as Killer Mike and all of them get the ink dry and they get fine print, they get everything on point, check them out, because, you know, it won't hurt. It won't hurt. Even if it's not your primary bank, you need to be supporting it and then it won't hurt to put a couple dollars that way. Spread, they take that word diversify. No, so some of it's new, but to most of us, you know what diversify is. Spread. Don't put all your eggs in the same basket. Spread it out. So having 2 and 3 different accounts ain't gonna hurt. So put some money over here. Put some money over there. Why not? Why not? What harm is it gonna do? None. Actually, you probably come up. It probably be the best move you make, because your options now you got options, and you can just start trying to make moves. But anyway, I appreciate y'all tuning in. Listen, thank everybody for the donations who did donate. Continue to donate. I started a GoFundMe, so it's for the book. And what I'm trying to do, like I said, donate the money, and I'll send you a copy of the book. If you donate at least $10, I'm gonna send you a copy of the book. Donate whatever you can donate, but if you donate at least $10, I'm gonna send you a copy of the book. Somebody donated a pretty large sum, so I went and just gave away a few books, and that's what I'm gonna do, because I need to get the information out there, because the information ain't doing me no good, and it ain't about just making money. Don't get me wrong. I would love to make some money, but that's not my primary objective. Is to make money. I really want to get the information out there, because if we knew better, we do better. And at the end of the day, that's just what it's all about, spreading the knowledge. Even if you become super wealthy, super rich, I think it's very important that you go back and you educate people how to get where you at. The ones who want to learn. Because a lot of people want to emulate that. They want to make it to that same spot. They want to get where you at, but they don't know how. So it's our responsibility. If we got the slightest little bit of insight on anything, it's our responsibility to just teach them. Share. It's called share. Friendly faith sharing. Share. And then, let people make their own decisions, and let them see how it work out for them, But we at least got to share. But hey, I love y'all. Continue to donate. The GoFundMe, Facebook, hit me up. If it's all right with y'all at ifit'salrightwithyall.com. If it's all right with y'all at Gmail, email me, hit me up, leave me your comments, leave your info, contact. I'll get back. If you got any ideas, if I look dumb as hell, I don't care, whatever, just tell me, and then I'm gonna just try to tighten it up or whatever. But peace, love y'all.